belong to you. So that's the rule. Both of you. It takes a number of 3,000, 5,000. Okay. The first one should go to you, show you on your partner, and then you can spend the rest of it. Cool. Alright. This is hard for you now? It's okay. Okay, so blockchains. Yeah. So all of you have attended the previous session on blockchains, right? Just a recap, okay, of what you understood. And some new people out there. What is a blockchain? And speak loud so that you're on camera.
This is a new system for improving transparency of the system.
Okay. And who are the participants in the system? So it's a new system that you said it's a new system that improves the transparency of the system. And who are the participants?
All the companies, all the consumers, all the
Okay. Basically, blockchain exhibits its maximum power when individuals are participants and each of them have their private key, which they use to assert their presence on blockchain using a public key, which is accessible to everyone. The public key is accessible to everyone. All transactions are between public keys. So you don't know the name of the person, you only know their public addresses. But to reclaim the benefits on that public key, you have to have something unique to that public key, which is called the private key. And only then you can reclaim the benefits. Okay. Roughly the idea. What's the value of a blockchain network? What's the key determinant? What decides the value in a blockchain? Number of people accessing. If number of people are more, the value is more. It looks like that. Why?
Because in the network we are having a total transparency of whatever is happening, and also we can keep a track of the different departments and whatever updates they are doing. We cannot access those data, but we can see them.
Have you heard of power law? Network power law? No? What's the power law of a network? Oh, sorry, a square law. A square law of a network. The value or the power of a network is proportional to the square of the users. Okay? So if a network has 1,000 users and another network has 10,000 users, what's the difference between the two networks is 10 times. But what is the difference in the power of those two networks? The value of those two networks? 100 times. Okay, so square times. So when we talk about valuation, okay, let's say currently the biggest blockchain network on this planet right now is the Bitcoin blockchain network. And the Bitcoin blockchain network is valued today at today's prices at $39 billion. Okay. And the reason why it is so valuable is it has about 5 to 7 million users. Okay. And then other blockchains they have 50,000 users or 10,000 users. But this difference, it basically creates a square law, a power law, and as the network, as the user starts growing, their value starts growing. Now, unlike other networks, Facebook is also a network, right? What kind of network it is? It's a social network, but it's a centralized network, okay? Which is all the people are talking to one central node. The central node is setting the rules, and all of the nodes have to conform to those rules, and then the central node will create a sub-network. Because Facebook has 2 billion people, but are you connected to 2 billion people? You are only connected to your friends and followers. Okay, so that would be 2,000, maximum 5,000. So you create your own sub-network, and here but there is no efficient way of finding its valuation. The only way to find valuation of this network is through its stock market valuation, which is around $400 billion. Bitcoin is $39 billion. Facebook is $400 billion. So let's just take Bitcoin is $40 billion, Facebook is $400 billion. What's the difference? 10 times. 10 times. What's the difference in the number of users between the Bitcoin blockchain and the Facebook blockchain? Bitcoin has 5 million users, Facebook has 2 billion users. What's the difference? 5 billion into 4. 5 million into 4 is 20 billion. Okay. 20 million into 100 is 2 billion. So Facebook network in terms of number of users is 400 times bigger than Bitcoin. But is Facebook valued 400 times compared to the Bitcoin blockchain network? It's only 10 times. Why? What's the difference? Why a network which has 2 billion users is being valued only at 400 billion, whereas a network which has 5 million users is being valued at 40 billion? Why? Because Facebook does not have an efficient method of value discovery. So to discover value in the Facebook network, Facebook has to show you ads. Those ads have to be monetized. And the long-term monetary value of those ads shows up as the total valuation of Facebook network, which is running as 400 billion. Whereas, in case of Bitcoin, what's the network doing is trading an asset. It's trading a digital asset. Each of those digital assets has a price. So we can straight away calculate the power of the network by multiplying the value of one of those assets, which is called Bitcoin, which is selling at a price of $2,500 yesterday, today $2,300. There's a minor correction in the market. So $2,300 multiplied by all the outstanding assets which are there. And the outstanding assets currently are about 17 million. Okay. In all, there will be about 21 million. Okay. So Bitcoin, a blockchain, discovers value more efficiently than a hierarchical or a centralized network. So Bitcoin is decentralized. Absolutely decentralized. Decentralization is one part of the argument. The second part of the argument is it's directly trading a monetary asset. Whereas Facebook is not trading monetary asset. Facebook is creating user lives. Both of them are creating user interactions in slightly different way. And so both of them are creating user interaction in certain way. And I don't know, you attended or you didn't attend the class. Okay. So I'll just come back to that. We are just talking basics of blockchain right now. Okay, and then we'll see the implications and how the world has changed because of blockchains. Okay. So in case of Facebook, the interactions are you put a picture, you put a post, and people like it. You know, those interactions then create a momentum inside the network, and then that momentum is encashed by Facebook showing your ad, and people pay to an ad. So you can see a lot of leakages and steps between your interaction and the value that the network, the monetary value that the network generates. Okay. Let's do an academic exercise. Assuming Facebook was like Bitcoins, or Facebook transformed itself into a Bitcoin kind of structure, okay, and directly started trading something called Facebook points, okay, what would be the value of that network, given it has 2 billion users, compared, assuming the metrics that we would apply to the Bitcoin network. Let's do the calculation. So what you have to do? You have to multiply the valuation of Bitcoin network by 400. Okay. And just by 400 times square. Okay, square. Okay. 1,60,000 is the multiplied by 40 billion. How much is that?
64 lakhs.
64 lakhs billion. Billion or billion?
Billion.
64 lakhs billion. So, okay, so 1,000 billion is a trillion. Okay? 64 lakh billion, right? 64 lakh billion. So let's because we will have an international audience, so they won't understand 64 lakhs. Okay, so 64 lakhs is how many millions? 64 million? 6.4 million. So it's 6.4 million billion. What's the GDP of the world? Total GDP of the world? About 80 trillion, yeah. 70 to 80 trillion, yeah. 80 trillion is the total GDP of the world. How much trillion is this? 64 million billion.
66,400 trillion.
64,000 trillion. Okay? 64,000 trillion. 1,000 trillion, yeah?
6,400 trillion.
6,400 trillion, okay? And so we're talking 80 trillion versus 6,400 trillion. So how much is the difference? 6,400 to 80. No, not square. Here there is no square word. Square is when we compare the Bitcoin network and Facebook network, but now we are just talking linear there, okay? 80 times. So you can imagine just one network. If Bitcoin will become as big as Facebook network, or if Facebook will transform into Bitcoin, it will create a value which will be equivalent to 80 times the world GDP as it stands now. Okay? That's believable.
But is it possible for Facebook to create a structure like this?
Of course it's possible. Facebook controls 2 billion people of the world. It can do whatever it wants to do. The question is, will it get the idea into it? Or question is, will it have the technology to transform, because it has invested in technology almost all these years, to transform itself into its present structure, into what it takes to do a true Bitcoin kind of network. Because Bitcoin is an anonymous network. Facebook is a known user network. Okay? But we're just doing a thought experiment out here. Okay? So, what is exciting about blockchains is it could unlock value at a scale that was never imagined before. I mean, today, if you want to do something like Facebook, you have to go first have an idea, you have to incubate it in a place like Harvard, you have to start scouting for investors. Then those investors, some of your ideas may fail, some may not, or some might succeed. And then, then you have to have venture capitalists involved, governments involved, then you have to build all the technology and then keep on shaping it up. To be able to create $400 billion of Facebook value was not easy journey, very tough journey. There were court cases, okay? There was an IPO in between, it was not easy. Whereas Bitcoin was developed by a guy who don't even know who he was. A guy came out of nowhere and he had no venture capital support. No one knew him. No one even knows his name. Anonymously created this idea, gave it to the world, vanished away, and it still survives. And he created $40 billion of value, which, if it captures 2 billion users of the world, will be 6,400 trillion. So how easy it has become to create value. And that's the power of blockchain network. And that's why I think we had a question and answer round that day. And we were asking, name all the promising technologies in the world, okay? The most promising technologies. So people came up with cloud, they came up with artificial intelligence, they came up with autonomous driving vehicles, they came up with deep learning, they came up with analytics, they came up with IoT. All these technologies are pale compared to blockchain. Because blockchains unlocks human creativity directly and in such a way that it cannot be stopped. Okay. So I realized this. I had this realization. I was looking into Bitcoin for 3 years. I've known Bitcoin since 2009, but I thought it was just a hacker thing and it was just a thing that will fade away. But once I read the paper, there's an original paper called a peer-to-peer transaction system by Satoshi Nakamoto. It's an original paper, okay? When it came out, I read that. Then I started realizing, slowly I started realizing the genius of the work. Because you have hundreds and hundreds of paper on the internet. If you read it originally, you are not, there are a lot of crazy ideas, none of them could be fascinating. Okay? It's not easy to decide which of them is really a world changer idea. Okay? And and especially when drug addicts are using it and being used for, initially it was used, actually, that's also rather interesting. Like one of the, right now, what is the most productive economic system in the world? It's the United States of America economic system. Right? the system of individual liberty with rule of law, with courts, which does it work, which is honest and transparent government. They have created the most powerful economy and the most powerful hotbed of innovation in the world. Okay? That's the most powerful economic system in the world, the US economic system. Okay? And I think, but when US was being created, it was created by grabbing lands from the natives. It was created basically such a magnificent piece of human organization was created by guns, essentially. You know. So I think the same thing is happening with Bitcoin, which is Bitcoin initial users, the users who bootstrapped it, who got the initial demands, basically drug addicts, who could sell drugs cheaply, anonymously using the Bitcoin network. And I was on a world trip to. They would just exchange Bitcoins, and then they would, the person who got the Bitcoin, received the Bitcoin would send a book with page number 38, having, you just go and lick page number, like 10 words, the middle keyword is the page of the book, and you will get into the book. Something like that. So they would accept payments in Bitcoin and give you a normal stuff, but there's a code word separately. They would secretly transmit to it, and if you unlock the code word, you will unlock the location where the drug is, and you can snap it away.
But sir, anonymity is the negative side of the Bitcoin, right?
What is negative side?
As in, like, drug dealers, they tend to transact their transaction in Bitcoins.
Right.
So, police can't control the petrol on their these things.
Okay. So now the question is this. That's a philosophical debate. There are two questions on it. If someone wants to consume drug for himself, okay, and he's not killing anyone, he's just paying money and getting drugs and consuming, okay, who gets to decide whether this is legal or illegal? If someone else gets to decide, if you are wearing a red striped t-shirt, and someone says that is illegal, I am going to arrest you because you are wearing that red t-shirt. Because the red t-shirt can attract a bull with a horn, you can damage it. I make a decision, okay? Because it's a threat to, you will start attracting all the bulls and will come with their horns, start puffing and start attacking you. So you're not allowed to wear a red t-shirt. Let's say the law is made. And then we start a media campaign and then law campaign saying that will start prosecuting your tickets, because you are attracting all the bulls, which is a threat to the safety of.
So, sir, this can scale up, and the terrorists can also use this, like for arms dealing and.
So, are the terrorists not using mobile phones? Are the terrorists not using? Are they not eating food? Are they not wearing glasses?
Same thing happening now.
Yeah. I mean, the terrorist is not using this. They're also using a lot of things. They're also human beings, right? Other than guns, they're using the bathroom, which has a flush. So if you use a flush, okay, I'm just giving an argument, okay? You have to register yourself with the government and license, Or if you eat food every time you do food, you have to license yourself to the government. That's a debate, okay? That's a debate. So the question is, what has happened is we live in a biased world, okay? You live in a world. So you live in a world where that's why this whole concept has been so challenging. It challenges all your existing notions, your biases. Okay? So when you have been conditioned to think a certain way, okay? And Bitcoin challenges all of that. And now the question is not whether Bitcoin is promoting terrorism. Is our definition of terror, is there something wrong there? Are we attracting terrorism by doing something? Or maybe in a world where everyone is rich enough, they don't need to do terrorism. Terrorism is because they have been deprived of some resources, and if everyone had enough of their own, they wouldn't need to kill anyone because they already had it. And we live in a world where the distributions are skewed in favor of, right now, who gets to open the engineering college in Maharashtra? Politicians. Right? Who has access to all the resources? Politicians. So politicians and the big ones are getting big and richer, and a lot of people are being poorer. The poor people, some of them are turning into criminals. What if that system is supposed to? Okay. So basically all these questions have come all together out here. So I think anything that promotes income. That was Amartya Sen's theory. Amartya Sen made a fantastic discovery when he did the research on Bengal famine, and he said Bengal famine was not because there was a drought or there was no food. There was plenty of food actually. Yeah. The problem was the problem was the income, the distribution of income. It was an income problem. The people who were working, okay, they couldn't like they were all in Jamdari system. The income source dried out. Okay, and because the income source dried out, they could not just procure food. Look, if they had enough income, you can get food in deserts like Saudi Arabia, and water in deserts like Saudi Arabia. Okay, so all the problem of the modern problem that we have at this point of time, be it education, be it sanitation, be it be it crime, be it poverty. If you had to triangulate it and find out why, where, what is the single point of attack, it should be the income of the people. Give access to income, equitable access to the income of the people, and you will solve all these problems. That was a fantastic discovery by Amartya Sen, saying that when he said that the poverty was caused, it was not a weather problem, it was not a famine problem, it was an income distribution problem. So even if it is anonymously, but if it creates an income source for people, it solves a lot of social ills. And I think just that is what. Okay, you're asking something.
After the transaction, I got the Bitcoin. And now I convert this Bitcoin to real money.
What is real money? Rupee or dollar?
Rupee or dollar.
So there are exchanges. In India, there is an exchange called ZPay. ZPay, Z-E-B-P-A-Y. ZPay. You have CoinSecure. You have UnoCoin. There are 4 big exchanges, and there is the
Blockfolio?
yeah
Blockfolio. It's also a platform that you can.
Blockfolio.
Yeah, in cryptocurrency.
In cryptocurrency. No, is it in India? I'm talking. They will give Indian rupees. Okay. I mean, yeah, there are a lot of platforms in crypto. So I'm just telling them how they can get convert into the money that they understand. So right now, what you could do is you can go to cryptographic exchanges and convert your bitcoins into money. Okay. My firm, Ranchi Mall, has come with a service in which you can give us the Bitcoin, and for whatever value it represents, if you want to buy a laptop from Amazon, or you want to buy anything, air ticket from Yatra, or anything, any product that you want, we'll buy free. Only that's the service I'm piloting anywhere in the world. Service you can buy from UAE, but there's like bank account issue. The bank account opening has become very difficult in UAE, so it's going to take about 2 months. The bank account will open. But if you can open a bank account in UAE, you can send money all over the world. Unlike India, where you can take in money from outside, but not send money, which is a restriction on you.
Rohit, how did the initial value of Bitcoin get set when the pioneers were trading?
Right.
Of course, there's a recipient of the Bitcoin, right? Why would he want money back in Bitcoin? Who was giving him money to do that?
So that is always a challenge for just not Bitcoin, for a new cryptocurrency. Yeah, is to how to bootstrap a currency, how to create the initial demand. So basically, what they did was they gave it for free. Okay, so they gave it for free for the people, and then somehow it just came out, and then the first real usage came only with the drug business. And when they got to understand they could use it in the dark web without being trapped. Okay? That's how the first usage came. And I think the first valuation which was set was about 0.0008 cents per Bitcoin. And the one official transaction that they did was this: they purchased a pizza for 10,000 Bitcoins. 10,000 Bitcoins. 10,000 Bitcoins. At today's price, that's about $3.3 million. $3 million. 10,000 into 2,300. 10,000 into 100. 10,000 into 100,000.
1,000 into 1,000 is 2.2 million.
Yeah.
One more zero.
Yeah.
23.
23 million. That pizza is worth 23 million. And sometime when the price of Bitcoin went to $3,000, the pizza was mostly pizza. Like the person who purchased that pizza must be very happy that his losses reduced from $30 million to $23 million. So basically, what happened is that again, it comes back to what decides value to a network. So what gives value to a network is the number of users. So initially the users the number of less, so it was being valued at 0.00%. When the number of users went from 1,000 to maybe 2,000, the value went 4 times, and when it went to basically when about 5,000 users joined the network, the valuation of Bitcoin went up to 0.008, which is 10 times. And that's when there was this guy who put $3,000 of his money, 1 full month of saving into Bitcoins. Today that's worth $25 million as well. And he travels on the world. That's the last time, all the hotels. Because the interest component itself is more than enough to cover all his costs. And I think that's the point we are heading into, which is those who are aware of it. So those who have the knowledge will become rich very, very fast. And then they'll start spending lavishly. They start spending lavishly, other people start becoming rich. So I think you're not far where your primary earning will not come from your working, it will come from your investments. And mostly from crypto investments. That world is not far. Yeah. So
just one point on that.
Yeah.
So we are saying that the number of people,
Yeah.
the more the value of the network.
Yeah.
Now that is, I believe, conditional to the fact that there can only be 21 million bitcoins ever.
That's but it can be subdivided. Every Bitcoin can be subdivided into 100 million.
Yeah. So if that limit is removed,
Yeah.
will the value of the network start falling down?
No, I mean that's just the supply part.
There's no
It's just, I mean, like 21 million to 21 billion, and then your Bitcoin, equal Bitcoin, it's just a numeric number. Your Bitcoin valuation will shift from decimal places less. It is what has, so this other thing about valuation is, and I think I talked about it to your seniors, is economists have debated for long what causes value. And the first theory of value was the utility theory of value. Anything which is useful as value. And so what gives something value? Okay. And if something is not useful, then it's not value. Okay. And then they came up with they also came up with this mathematical unit called util to denote utility. Okay. Someone is, let's say they have set up a standard utility as 1 util, which is 1 satisfaction that you. And something like 10 util if it is more valuable, more like useful for you. Then came the very famous water diamond paradox. Okay, and so what is the value of water? Almost free. You get free water. What's the value of diamond? It's very expensive. Okay, you can buy probably tons and gallons of for just 1 diamond. What is more useful? Water is more useful, or diamond is more useful? Water, you will die if you don't have water. Okay. You will not die if you don't have diamonds. So what explains diamond having more value and water having no so less value in utility terms?
Scarcity of supply.
So there is, let's say there is this element called tritonium, okay, or kryptonite. Okay. There's absolute scarcity, there is none. Will it have value?
Unless it's perceived to be value.
So something has to be perceived to be value. So it's complex. Something has to be useful as well. It's just not just scarcity. But scarcity is also an element of it. Okay. So essentially, how this theory was patched, which I think is incorrect patch, was the economists then came up with this concept of marginal utilities. It's not a utility. It's the marginal, it's the extra utility that you draw after your last consumption. And the value is set by marginal utility. Okay. So, and then I normally say that economics has been on margins ever since. So, marginal productivity, marginal curve, marginal cost, marginal revenue, and all that stuff. It came from that marginal utility concept, And I'm not a big fan of that. So coming back to the question, who was a question value, but you asked me, what gives value?
Yeah. How do we decide?
How do we want to value? Okay. So essentially, value. So something is scarce is more valuable, provided that scarce thing has some utility, and but there's only one true way to understand value. Okay, and I think the only conceptual theoretical framework that you can understand value is in terms of game theory. So if you say there's a game being played by people who are the suppliers of this scarce resource, and the people who are consumers of this scarce resource, and the supplier wants to give away the stuff, but only at a certain price. The consumers want it, they want more of it if the price is low, they want less of it if the price is very high. And then they start interacting with each other. Okay? There's flow of information between the suppliers and the consumers. And then they settle into an equilibrium, which is the Nash equilibrium. So it's the Nash equilibrium between the suppliers and the consumers that sets up an equilibrium, and that Nash equilibrium changes every single moment. Okay? It's psychologically, so that's what the market price is. Like today's Bitcoin price is 2,300. That's the value per Bitcoin. Okay? And tomorrow's 2,500. That's the Nash equilibrium tomorrow. That's what it has settled down to. And so value has nothing to do with whether the good is physical or not physical. Okay? I mean, you may not need to really touch it, but it may not be real. So long as there's a consumer, so long as there's a demand, so long as there is a supplier, so long as there is some utility, and so long there is scarcity, we'll have something which has value. And that's a great realization because that we can create a lot of items which are valued. It becomes an infinite resource. A lot of people doing lots of things, and we can, through just by human interactions, we can get enough value that can take care of all our basic needs, although needs will be infinite. Okay, so that's another dimension of the blockchain, in terms of value. So what I did was that once I realized that I wanted to get into something, I wanted to do something. I realized the long-term trend of Bitcoin prices. I came with a product called Bitcoin bonds, and what I told was that Nikhil is one of the people who purchased my first Bitcoin bonds. He was still not sure at that point of time, but you are among the best gamers. You're 9 cent price, right? Yes. You're 9 cents. He was very skeptical whether this is true or not. So what I told was, I'm going to guarantee 12% return for 3 years. If there is a 3-year lock-in period, and there will be 3 lock-in periods. Okay. And I will also guarantee that I'll take your money and put it in Bitcoins, but I'll be the Bitcoin manager, fund manager. Yeah. If the prices of Bitcoin falls down from what you paid when I got in, I will compensate it from my pocket. On top of that, I will give you a guaranteed rate of return of 12%. But the condition is you have to split 50% of the gains, because you are having zeroed outside gain. So you split 50% of the outside gain. Okay. But I will guarantee 12%. Okay.
If it's more than 12%, you have to share 50%.
Yeah.
Bad deal.
Bad deal, yeah.
Bad deal.
Bad deal looking bad.
No, not looking bad. You should have. It's a completely bad deal. You should have seen how fund managers work.
So I've stopped that product now. It's no longer.
Which year was this? Which year was this?
This.
Then completely bad deal for you.
Why?
You can see the history of how it is growing. There's no way it was going to crash this year. It may crash in 2 years, 3 years. No, it may crash in 3 years. I don't know, but.
See, these are the people who have never got into Bitcoins. If I had not come with it all. Okay? They had absolutely no inkling with Bitcoins. Okay? And it was targeted. So there is this group called Bitcoin Talk Forum where a lot of. So you have to see, when you do marketing, you have to select your target page. Okay? You have to know which consumer base to position it for. So I introduced this. After I sold all those things, I went to the Bitcoin Talk Forum and they said it's a scam. That's what they said. There's nothing, because they knew that it's going to go up. Okay, I said all you're charging 50% just good for nothing. Okay, but for my consumer base which is offering, I was basically offering it to my Facebook users. Okay, it's just a sample. Okay, but then they had never seen Bitcoin, they had not known Bitcoin, they didn't know how to handle it. They were looking at it as an asset that's going to pay them 12%, and they had none of this information that you have. Okay, they're just simply looking at 12%. For them, it's a great deal because in US the rate of interest is almost 0 right now. And that's how people from US also. And in Europe the interest is very, very low. Japan is actually negative, that you have to pay banks money to keep your money. And I'm going to 12% in the currency.
If we are considering Bitcoin for investment, see, if we take stocks for investment, we see their performance, their P/E ratios, and many other things, their high lows.
So Bitcoin, you have to see in Bitcoin you have to see the value of the network, which is the number of users. So you have to see what is the number of user growth. If the number of users will grow, the value automatically grows, and that value will show in Bitcoin. So stocks are you see in terms of profit growth, because stock is in case of stock, what's the asset? The asset is you are taking the ownership of a company, and what gets to you is the profit which is accruing to you. But Bitcoin is not a profit thing. Okay? Bitcoin is an asset which basically means space in the blockchain network. Okay? Some space in blockchain network, and that space is limited. So how much people are willing to pay for that space, and that is decided just by one criteria: how many number of users are using. So if the number of users increase, the Bitcoin price is automatically increase. There's nothing, no complication like the stock.
So can you tell me what is the expected returns for this year? If we invest,
that's like guessing what would be the expected number of
according to
users.
trends, past trends.
Yeah. There's no past trend out here. So, but what you can definitely say is Bitcoin over long term. Short term, see, and this is the established theory. Short term, you'll not be able to say make any prediction about any month. Even if you're very like, it could fall also 50% this in Bitcoin. Okay.
It might actually in August if they actually split.
Yeah.
There's a chance that at least one of those
In short term, when things can go wrong and you can never predict, But in long term, that's where you get certainty. Okay, and that's where you can make predictions out here. So in long term, if 2 billion people join, the Bitcoin value will change it to 100 billion. And right now it's about 100.
As the sir said that Bitcoin is splitting, I read in the newspaper today. So should we wait for August so that happen, or should we invest?
I would not wait.
See, if it doesn't split, it will just go to the
I would not wait.
exponential value.
I would not wait.
So,
I would not wait.
Why is it splitting?
No, what happened was that there is this debate about what has happened is that if you look into technicals of blockchain, okay, so blockchain runs on, where does someone knows about blockchain? Blockchain runs
there are
on
multiple users which authenticate the particular transaction. I think it's 13 or 14 person should authenticate a particular transaction to make that transaction happen. And this is called mining, I guess.
right. Good.
This is something I know.
Good. So what happens is that basically the blockchain runs on your computer. Just like, have you heard of BitTorrent?
Yeah.
Where does the BitTorrent software run? Or who holds those files, the music files, or the video files, or the books files? All users of the world. Okay. And you basically, your computer is talking to maybe 10 or 15 of those users, and everyone is talking to 10 or 15 users. And what you do in a BitTorrent network is you split, let's say, 1 gigabyte file into 1,000 1 megabyte files. Okay. And every megabyte file, you find a value which is called the hash value. Okay. And what you do is you only exchange the hash values, and so you create a list of hashes for every single file. And you start demanding, give me this hash, this. All you say is you identify a portion of the file which is hash address, and you say, give me this hash, I don't have this hash. So you're not actually dealing with the actual files, but they file a small address linked to every single file component. And if someone has the hash, we'll give it to you. Someone doesn't have the hash. So basically, one hash you're waiting for this guy, one hash you're waiting for that guy, that guy, that guy, that guy. And actually, that's how you get the whole file. Okay. But at the end of the day, all those files are residing with the user vectors. In case of Bitcoin, it's a similar architecture. So all the transactions are happening with individual users. All users on their personal laptops. Okay, and those laptops are talking to each other, and they are getting, they're doing all the communication and exchanging the files and the values, and so Bitcoin has this blockchain. Blockchain has a shared ledger. That shared ledger denotes which address has how many Bitcoins, and denotes all the transfer between Bitcoins. And blockchain solves this problem, which is called the problem of double spending. So if a miner certifies that this transaction between this address and this address is valid, then the transfer has happened. And the first address cannot split it again, but now the value has accrued in the second address. Okay? So all of this happens on the computer. So that leads into supply some bottlenecks. Okay, because your laptop can only do different things. Okay? And so Bitcoin inherently is not very scalable. So what has happened is currently the Bitcoin block size is 1 megabyte, and using a technology called SegWit, it's called segregated bit, they can increase it to 4 megabyte. Now there's some people who want to do it and some people who do not want to do it. So if there's a very strong set of people who want to do it, and that's the August 1 deadline of a split. If it splits, then so the Bitcoin blockchain will have 2 different copies of blockchain running. Okay? And then ultimately, I don't think it's a big crisis because one of them is a winner and one of them is the loser, and the winner will then finally get all the time. So it's inbuilt into the Bitcoin blockchain architecture to do it, to resolve such differences of opinion. It automatically achieves consensus. And we can go into technology also. Now, how many of you are from technical background? You also. What's your background? IT. And you? You're it? Mechanical engineer. Okay. I'm sure all of you are engineers. Right? All of you have taken basic mathematics, basic physics. Definitely will be long-term prediction. And I'm predicting 30 years from now, 1 Bitcoin will be $1 million. 1 million, at least. And we have purchased 4 Bitcoins, so I've taken some small amount of money to do just a play a bet kind of thing. I'm managing that for my batch, so almost half of the batch is participating in that scheme. And most of them are putting about 20,000 rupees. But some have put 6,000, and about 1 or 2 people have put, one person has put 6,000, one person has put 3 persons have put 10,000, and remaining have put 20,000, half of my batch. Okay. And so we have had enough money for 4 Bitcoins. And a little bit of cash is left out, and the Bitcoin prices were higher when I was doing it. So my acquisition, we bought 4 Bitcoin at an average price of $2,660, and I'm saying to get $1 million 30 years from now. But they will have a chance to encash it from 10 years from now. So 10 years, 15 years, 20 years, 25 years, 30 years. There are 5 exit points. And if there's a big, like someone's kids become big and they need education, or there's some expenses, or or they are old and then some medical expenses, and then we just back it out. Or if there's an emergency in the batch or someone needs immediate money, then we'll break the rule and take the money back. So right now, of course, the post back is just about a month back has been closed. So Bitcoin prices have fallen on 300, but I don't. It's a 30-year bond, literally. So I don't care much. I don't really look at it.
So one more fundamental question on that. So here's the utility of currency as a store of value, which is what the fund that you're talking about. And the other is the original Bitcoin white paper, which said the whole purpose was to enable transactions cheaper than today's cost. Today, a transaction costs 2 to 4%, depending on who's your processor.
Yeah.
And that's a big problem because.
So I think as events have developed, Bitcoin is not very good for microtransactions. But you could have floating point blockchain, which is exactly the same architecture. That could be used for microtransactions. Some other blockchain could do it. Bitcoin is amazing for macro transactions. It's more secure because the amount of computing hash power, which is powering the Bitcoin network, is 1 million times more than top 500 supercomputers combined. So if all the governments were to use all the supercomputers trying to hack the Bitcoin network, hacking means creating spurious transactions. They need computing power for that. They need to create 1 million times bigger farm, and then they will do it. Even then, they will not be able to do it. So it's turning out to be amazing for. So Bitcoin growth has far outstripped what Satoshi Nakamoto thought, to the point where I think doing one transaction almost costs you $1 now.
Yeah, so
on the blockchain.
Yeah, that's the big problem. So,
But if you buy $1,000 stuff, if you do a $1,000 transmission, it's still cheaper than $50 that you spend for $1,000. Many people who in Bitcoin, it does not matter what's the value. It's independent. It's the cost of one transaction. It's just one space. Okay. So if you do a $10,000 people of $1,000 remittance that a worker does from Middle East to India, he's basically paying 5%. Okay. So if someone else does 1 lakh rupees, that's 5,000 rupees. And it's 10 lakh rupees, that's 50,000 rupees. Expensive. Just do that. Bitcoin is still 50 rupees. It's still cheaper than that for large transactions. If you do a transaction of 1 rupee, then obviously 50 rupees is a person. Yeah.
If we get a little into technology,
Yeah.
how does a transaction take place in Bitcoin?
So your question is, how does a transaction take place in Bitcoin? Okay. So a transaction is transfer of a Bitcoin asset from one set of address to another set of address. Okay. So let me simplify it. It's transfer between one address to other address.
Everything, about the data getting stored in the ledgers and then all the members verifying it or authenticating it. Could you please explain a little about that?
Yeah, I'll come to the full life cycle. But let's just first tell you what a transaction is. Okay. So the transaction is transferring value from one address to another address. What you do in that case, if let's say the blockchain network says this transaction is accepted, then you deduct the amount transferred from the sender and you credit it to the receiver. That's the basic point.
What is the address that we're talking about?
It's the public address attached to, is the public address to which there is some private address to which only one person has access. So what happens with Bitcoin is, in Bitcoins, all the transfers are happening between different addresses. Okay? And you can claim ownership to an address by having a public key hash address. Some private information attached, which is only with you. And then you can claim ownership to that. Claiming ownership to that means you will be able to transfer it to someone else and get cash out of it. Okay. So the way it works is, so first you will start a transaction. Okay. So what first you need to do is to do a transaction. Okay. So suppose I give you money. How will I give you money? I will transfer money from my address to your address. That's a transaction. Now, the job of the blockchain network is to make sure that once I have given you the money, I cannot give the same money to someone else. Because in digital bits and bytes, you can double spend, you can copy and send it again. So it's to prevent that. So how does it prevent? Is it writes this transaction as a valid transaction onto the blockchain network. And that writing can only be done through a very computationally difficult process which only very few people can do. So a process called mining. Okay, only when you do mining, only then you can write to the blockchain network. Other than that, no one else can write to the blockchain network. And mining is such a complicated task that once you mine it, it's better to go and mine something else rather than to remine it. Okay, which means once something has been mined, it's permanent. Okay, so that's the overall picture. And I'll come to a little bit slightly technical details to you on that. So what happens is that a blockchain means some transactions happening in last 10 minutes being sealed. Okay, so like you did one transaction, I did some transaction, we did some transaction. You collect all those transactions in the last 10 minutes and you seal it. Okay, you just seal it. Okay? And when you seal it, you create a block. And when you create a block, you through some complicated mathematical method you seal the block. Okay? Then after the next 10 minutes what will happen is another block will emerge. And someone else will seal it. When someone else seals the block, he has to refer to the previous block. Okay? He has to chain himself to just the previous block. Okay? Similarly, the block after will have to change your block. Okay? So So we are basically chained to all the blocks since the start. And only the transactions which are in this chain are valid transactions. Okay. So we have the history of every single transaction done from start in the blockchain. Okay. Now because everything is the chain, you can go and refer back to the chain who had the original balance and who gave it to whom. And if something is out of the chain, is discarded. If something is in the chain, it's valid.
How can something go out of the chain?
Someone could create a block and not link it to one. I can create a minor block and not link it to any other block and advertise it to all the computers running and saying this block has been created. Okay. That's what's called blockchain. Did you understand?
Yeah.
To some extent?
To some extent.
Yeah, you got to go back and read. So basically, it simply makes it impossible to tamper with that data. And that system, you can measure exactly what it is. Want a small break?
So what exactly do we mean by mining?
What do we exactly, what is traditional mining?
It's like
Digging.
Yeah.
And extracting the mineral. Here mining means extracting and sealing the data. So when you extract gold out of let's say underground mine, okay, and now you process it, you get gold. Here you are extracting a block out of a pool of transactions. Okay, since you're extracting a block out of, let's say, a pool, because of the earth or underground of transactions, it's called you're mining a block out. Do you have that laptop? Can you show them how the blockchain data looks like?
Oh,
The big bonkers?
yes.
Yeah. So we will give you a visualization of that, how the blockchain looks like. It's a beautiful visualization.
Two different people create the same block, the same set of transactions, two different blocks having the same set.
Then one has to be accepted, another has to be rejected.
One has to be chained.
You have to be chained, and so it's quite possible that two different chains are happening. Okay. Then there are rule of consensus, which to reject and which to accept. So that only one chain happens.
Consensus within the network.
All the people are collaborating. It's basically maximum people agreeing to one chain and voting one chain in and down in another chain.
Who is responsible for creating these blocks? So when you say a certain block is of 10 minutes of transactions, so
The whole district. But the block is activated only by one person, one miner. Okay, who gets 12.5 Bitcoin currently for creating a block, and that's the block we want. And that's how the new Bitcoin come into the supply.
And how do they get distracted? There's some logic to. I mean, they get half every time, every certain.
So what happens is there's something called. There's only one way to. When you started on day one, there's no. The block reward was 100 Bitcoins, okay, per block. So after 10 years, another 100 came. We keep on doing for 4 years. After 4 years, the block reward is halved to 50. So in 2013, the first halving happened, when the block reward went down to 50. And then in 2000 and basically last year, 2016 May, the second halving happened, and the three halvings have happened. Yeah. So 2013, 2009 to 2013, 2017. So right now we are at 12.5 phase right now. Okay. So, okay, sorry, the first was 50 blocks, sorry. So the first reward was 50 Bitcoins per block. Then it became 25. And now we are in the second halving period, so 12.5. So every time the person who creates the block, so to create a block you have to solve a very complicated mathematical puzzle. It's basically you have to find a hash which is lower than a target hash, which is a very difficult operation. Okay. If someone can do that, he gets the right to claim ownership to that block. And he gets 12.5 Bitcoins as the reward currently. So in the next 3 years, another halving will happen, and then the reward will only be 6.5, which means only for every 10 years, only 6.5 extra Bitcoins will come into circulation. And it will all the mathematically set up in such a way that at 21 million Bitcoins, it will all settle down. So, you have that as well. Wow.
that's better.
No more new creation or
Yeah?
no more new creation of it.
No, the supply is limited. So after 20 million, there will be negligible, like 0.001 Bitcoin something. is asymptotically equivalent to 21 million. So that's why it's something that demand goes on and supply keeps in going back.
Yeah.
Was that your friend?
Yeah.
Thank God you're not your girlfriend now.
Yeah.
You have no record.
I want my daughter.
Yeah. So that's block number 475, 451. And if it's a red ball, it means less than one big BTC transaction has happened.
Sorry, what does it mean? I just.
Yeah, you can, yeah. You will explain it. You should change the camera direction also, right?
Can you see it now?
Yeah, you can see it. Okay, just see that.
Those are the real-time transactions happening in Bitcoin. So, if you see this is a block explorer, which is showing real-time data about what transactions are happening. So, you can see that. If I send you a transaction right now, it will be listed up there.
These are the transactions which are
Happening right now in real time.
Real time.
What is that 2327 transaction?
That's the value. That's the number. Value of.
Which
what that is.
So that's a block. So first 2327 means on a block. So this is 475, 454 block from the start. Okay? And one block comes every 10 minutes. In 10 minutes you will have number 55 coming out. Okay? Then 7 more minutes. Okay? And it's not exactly 10 minutes, but sometimes you could see like it could be, but the average should be 1 per 10 minutes. Okay? In that block you have 2,327 transactions, and the size is restricted to about 1 megabyte. So that's the number of bytes, 992. Okay? And in the bottom, every transaction has a hash. Everything is encoded hash. I just told you, So it's the hash of the transaction, and it tells how much value of transaction it's spending. And this information is now given in the graphics that you see. So if it's a big ball, the purple ball, it means it's a big transaction of more than 1,000 Bitcoin. So small ball is less than 1 Bitcoin, and others are. So this is purple, so 1,000 Bitcoin. Okay? Blue is 100 to 1,000 Bitcoin, and you saw the block number was 475, 450. So if a new block comes, it will be kicked out and new block. And all these transactions are happening on the real time.
So all these transactions are happening on this block, right?
No, these transactions will go to the next block. These transactions are repeated transactions. They are not into the any block. They are just in the block pool, the memory pool.
Someone has taken ownership of this block already, or does it happen once the transaction is
475, 455 has been taken over. Okay, the next one is not taken over. Next one, if someone takes over, he gets 12.5 Bitcoins in India. But he's basically tracking all these transactions which are happening. These are transactions happening, right? People are transacting and sending each other Bitcoins.
So it's
These are happening.
first come, first serve basis now.
It's highest value first, because the blockchain block creator gets transaction fees higher if the number of Bitcoin is higher. So it's done. He tax in the hour of highest value first, because he gets 12.5 Bitcoins at the block fees, also transaction to every transaction. That's roughly about 4 or 5 Bitcoins per block. So it's not possible. It's quite possible the transaction can happen after. If it's a very small value transaction, it can be enough reward, it can happen 3 or so.
Each block has 1 MB of data.
The maximum size of the block is
Roughly 1.
So these miners can see which transaction is happening and to which
everyone
they
can see which all transactions are.
So they can choose which transaction they have to.
They have to back. This is their choice. But it's in their interest to back maximum, very small.
With maximum value.
With maximum value in 1 megabyte, so that it's more money for them. They don't want to create a block with some space there, because that's lost revenue for the money.
So the same transaction can get logged into different blocks?
Same transaction can be logged into one block. The moment it's logged into a block, it goes to the block, it's out of the block.
So if 2 people are mining at the same time,
Yeah.
with a common set of transactions,
Right.
some different transactions, one gets a log, the other has lost all that.
Only the one that gets into the block is real, and the person who's putting in the block has to make sure that that transaction is executed only once. Everything else is clear.
So when they are building the block,
Yeah.
they don't have to chain. They don't start with chaining and then
No.
transactions.
Once the block is built, you have to, so now the 475, 455 block like that, it will change to this block by adding the hash of this block into the next block.
So that is done after all the transactions have been packed into
After
the
all the transactions is backed into it, and then the chaining is done.
Okay, so let's say exactly what he was asking. So let's say both of us are mining, right? Both of us are some transactions common, some transactions are different.
Correct.
Now his block gets accepted, mine is not accepted.
Correct.
I still have the option to chain my block onto the accepted block.
No. If your block is not accepted, you have nothing.
So I have to restart back in the latest transaction.
You may not even get the, so that block is gone. The moment a block is
It's
accepted,
not that block, it's two separate blocks in a way. I have a set of 10 transactions.
whose block got accepted by the blockchain?
There's just a, let's say only 2-3 transactions are common.
Okay.
Not all.
Correct.
And let's say my block gets accepted.
Correct.
What happens to his block, which actually comprises of a different set of
His
transactions?
block is rejected, zero now. It's gone.
So it's gone.
It's gone. The moment your block got accepted, for this time period, it's your block. Now you should start with,
linear.
yeah, for this time period. There's one block per this time period.
So the block
There's
number
just
will
one
change.
block, yeah, block can be changed by one.
So his block number will change. He can.
No, he doesn't have block now, it's gone, it's zero. He has to start with the beginning.
But the
He
transaction.
was mining for, yeah.
So what about the transaction?
So those transactions that he has tried to have to now, if this will be, if someone else will manage to create a block and chain successfully,
Yeah,
he will get to that. He is zero now. It's totally discarded.
There's something called the mem pool, where all the transactions go. You see that the lower side, right, where all the transactions were coming. So as soon as his block will get accepted, all the transactions from his block will go back to the mem pool. And then the next guy who's making the block will find out the best transactions from there and make a new block.
What happens if all the people decide, all the miners decide that they want to stop?
Why would they do this?
Just I'm
It's not possible. Everyone wants the money. So
theoretically what happens?
theoretically,
The block change.
theoretically this is not acceptable
wants to put it
behavior.
in the
State of the entire.
That's not even possible. Because someone will break out and get a block. What will happen is the difficulty level. Let's say if everyone walks out, the difficulty level will drop to zero and person with a simple CPU will be a block. Okay. And so it's not possible that you won't get a block. You definitely get a block.
So the number of people as the number of miners increase, does the algorithm to create
The difficulty level is simply
is
increased. So that approximately one block per second.
So suppose his block is discarded.
Yeah.
Suppose two miners are mining, and if one's block is discarded.
Correct.
So what about the transaction? Will they be delayed?
So the transaction that did not got into the block,
That will be delayed.
they come back to something called memory pool.
Okay.
Okay. So the next miner will start looking to memory pool, and he will take the transaction he wants to.
Ultimately, it will be delayed now.
He will be delayed.
is the
You are competing to take a transaction inside the blockchain.
So
Okay.
can I have two transactions before the block pool, before the block gets created from
Okay,
the
can I
same
have
set
1,000
of
transactions?
from the same set of?
But only one will be accepted. Because they are checking for the balance of the items. Okay. So the moment you gave it to someone, okay, so the balance is gone. So if the first one gets, and only the valid one is going in the block. So let's say,
No, no. Let's say there's a transaction,
Right.
and that transaction is not part of any block yet.
okay. So it does not exist right now.
The transaction does not exist.
It does not exist in the system right now. It's just,
So in that interim period, can
you can have two transactions on the same address, but only one will be accepted in the blockchain. And whichever is the one randomly selected is the actual transaction, the other transaction is just
So it's possible theoretically to have a set of transactions which are fraudulent in nature. Maybe? Let's say I have 10 bitcoins,
yeah.
and
You can spend with them because only once.
and I do two transactions of 10 bitcoins each,
Okay. Correct.
at the same time.
Correct. And to which address? The same
Two
address?
different addresses
Okay.
from the same address because
Okay.
I'm the sender.
Correct.
What happens?
But how can you do two when you are only allowed to spend 10? The blockchain network, before putting the mine, it's a job of the miner to apply the rules of the blockchain network. One of the rules is an address cannot overspend. So it will be checked, your address will be checked in the blockchain network first.
Okay.
Whether it can be very easily done using a hash tree, that whether he has spent the money or not. Okay, if only when you have unspent, it's called UTX, only when you have unspent money, then only you can spend.
Because both transactions are not part of any block so far, does not that imply that I have not spent the money?
No, but when it goes into the block, Now, assuming it has to go
Hasn't
to
gone into the block.
If it doesn't go to the block, it's not valid at all. It's illegal. It's thin air.
So
It has to go to the block. The moment it goes into the block, it's only when we start counting it.
No, so I think is exactly the question. So in between that space of, so I have
You can do
transferred some money.
You could transfer. From your 10 blocks, 10 Bitcoin, you can transfer to maybe 100 different places, 10 each.
Yes.
But your capacity, your block will only accept any 110 randomly.
Okay, once that 10 is done, the other 10
Then
is
once
gone.
that 10 is done, then your unspent on that address, the unspent of 10 gets something. Okay, gets spent. The moment it gets spent, it will all be rejected. It won't even come into the transaction then.
So till the time the receivers or rather the transaction has not been registered in the block, the receiver cannot deem to
No.
have the
The
transaction.
receiver can only deem when the blockchain is certified that transaction is good.
So can we access this platform from two different devices? So what if we do a same transaction from two different devices simultaneously
But then
of same value?
Same hash.
But if we do from two different devices at the same time,
Sure.
but what will happen?
So the point is saying is that your transaction gets recognized only
You keep
once
that,
it's part
or
of
is it
the
pending
blockchain.
error?
Oh, pending
Which
error.
means you gave me money, you have so-called transferred money to me, and from another device or same device you have transferred money to him. He cannot say he has received money, I cannot say I have received money till it's not part of the blockchain. Only once it's part of the blockchain can I say that yes, I have actually received money. Which means if our transaction gets registered in the block
So the
and
other
the chain,
automatically
he
gets
does
failed.
not have anything. It's not failed, he never had it.
same here.
He never had it in the first place.
So in the wallet you have a pending
It's better to do large value transactions on Bitcoin right now because
No, you just have to
this
be-
takes about 7 minutes or
Yeah.
10 minutes or whatever, right, for my transaction.
See, typically, your software itself won't let you do double transaction. Your client software.
Yeah.
You can only have to create your own plan. And so for most of the typical people, the moment they do it, will automatically go out. So it works for most of the people. It works in this.
If you do a transaction, who takes this transaction fees?
The miner,
The money.
the miner who gets to create the block.
Okay. Suppose I have done a transaction of 1 Bitcoin, so a part of it goes to miner.
You have to send a transaction fees, and if the miner finds the transaction fee attractive enough, he'll put it in the next block. Otherwise, it will wait till there is sufficient space in the block
So it's,
for that value.
it's up to user to offer a
Transaction fees. So there is a standard. You get a standard value which everyone is accepting. If you pay that much, then they say there's a good chance it will be available.
It's $1. you say.
Roughly about $1 of Bitcoin. Everything is paid in Bitcoins. $1 of Bitcoins.
So if I want to lessen the time of transaction, I
Pay more
will
transaction fees. Pay more.
Yeah,
Pay
there's-
$2.
I think it's here. There's
So you want to say something pending transaction? You want to show that? Yeah.
we can even show him the advanced section of this thing. Right?
Yeah, sure. That.
Transaction fee I can show you.
Sure.
So this is like he said, this is a normal transaction fee. I can increase it to, if you want your transaction to go fast, pay more and get it done. And the pending thing that you were asking, I spent 10 Bitcoins and then it's not gone into the block yet, but I spend it again. That was the question. But you can't do that because when you're giving me 10 Bitcoins, those come in the wallet, but they come in the pending section. Till the time that block is not created, I can't use them. Like it has to be in the
That's different. That's the function of this client. Like he was saying, I could create a client which prevents that. But
No, the client is just querying the blockchain and showing information.
But this is your client, right? So you say, what if you get my
I
own
could create my
client?
client and not have this
And,
tool.
and then you do an RPC to the blockchain.
But you don't have it on your address itself, right?
No, but the network doesn't get low, right?
And if the network let's not confuse it. Okay, this is sorry.
So every 10 minutes, a new block is coming, right? So
Yeah.
every 10 minutes, one of the miners is creating a new block,
One of the miner wins the lottery of creating the new block, and he gets paid more.
and he gets that 12.5.
Plus the transaction fees.
So why would a miner, how does it matter to him what is the value of the transaction? All that matters to him is the value of the transaction fees, right?
Yeah.
So the large.
So typically, if your transaction value is higher, you will pay more transaction fees that you want it to be. You want to make sure that gets into the process.
So the miner has that leverage of prioritizing the transactions to the client.
Miner is not sure whether he will win the lottery or not. Okay. So miner will only try the best possible combination for himself and hope he wins the lottery. No one else finds the hash before him. The target hash.
How do they find it? There's
It's like a mathematical algorithm. It's a random function. So you keep on trying. There's a value called nonce value. You increase the nonce value and then you play with it. And then if you do a billion or trillion calculations, you find it. Unlike hash.
and that needs a very superpower computer.
Oh yeah. You can't do it on PC now. So I told you, right? The Bitcoin network is empowered by a distributed supercomputer, which is many people do now ASIC farms now. It's down the cost of electricity. The cost of electricity is low when you have more computing capacity. It's more than 1 million times top 500 supercomputer.
Next block is not there.
Is that? Yeah, I think the block is low because like last block was done 35 minutes and
Yeah.
so it's coming. So today is some. So now the difficulty level will reduce now. I think some hashing power has gone down. Yeah, because the prices have gone down.
Yeah.
Like from 2000, so what has happened? Because the prices have gone down, a little of hashing power has gone down. But the hashing power has gone down, the difficulty level has not gone down. Okay.
So you're saying people shifted from mining to Bitcoin to some other.
So people, yeah, no, they're just not mining. It's not profitable, you know. So I get level, okay. So that's why the increase time will increase from 10 minutes to 35 minutes, okay. So what will happen is network will automatically readjust the difficulty level, you know, and then it will shift back to it. It will happen pretty well. It's amazing. The guy was a genius. They thought of every possible. And then if prices go up, then you have the hashing power has to go up, so that more people will come in because they want more miners to go.
Can you explain some of the use cases of maybe not necessarily an anonymous blockchain?
So one of the most exciting use cases which is happening. Okay, so let me just go back. Am I visible there? Just check. Yeah, so someone just like make a noise with the block. Okay, so one of the most exciting use case is what I call as initial coin offering. Okay. Is you could say that I want to raise money for a project and people will pay you in bitcoins or some other cryptocurrency. And all you have to do is specify an address and they will send it to you and then you give them the tokens and you give them some reward for something. Okay? And it's free from all regulation. You don't have to apply for approval, you can just go and do it. And people are raising money like crazy, $165 million in 3 hours. You know. Right now, which one is live? Which ISO is live? You're saying is that genome
Encryption.
Huh?
Encryption.
Encryption. Can you show the page? The ISO page. Is live? Is live? Yeah, I'm not tracking. I'm also doing an ICO Python. So you just yeah. It means initial coin offering. It's equal to IPO. So you're collecting bitcoins and blockchains. Bitcoins and and creating a new project. So people are raising equivalent to 100.
Is it like IPO?
It's like IPO, yeah. Except it's absolutely unregulated. So you can do it. Anyone can do it, and then you can set your own rules on it. Yeah, this is sure. Yeah, sure. So they have raised about they're raising 1,000 bitcoins. That's about $2.5 million, $2.3 million, and they have already done. Yeah. They have added all these different currencies, all different, ETH is Ethereum, Dash is another, LTC is Litecoin, ETC is Ethereum Classic. And they have sold 45 million tokens out of 80 million tokens. I have actually my company is doing token sale, we posted with them some of them as well, I'm doing a 21 million token sale, and I'm pricing it at $1 per token. So I'm going to release it slowly and slowly. So I've already sold about 10,000 tokens. I've already sold 5,000. Is also will happen. But it's only my small user base which is having. So I'm going to slowly scale it up. You bought 1,000 tokens. Nikhil has bought. He's been my so he's bought 1,000 tokens out here. And so initially I'm doing a pre-token issue price of $1 per token. But I'm also in a market where the price will even decide the market. So I think maybe about 20 or 25,000 tokens. At pre-issue price I'll bring it market price. And that's when we'll sell our tokens. And that point of price will market decided, and I'll keep on.
So someone who is buying 1,000 tokens would need to give $1,000, right?
$1,000 or equivalent.
Yeah.
So it's giving $1,000.
Or a BTC.
Or BTC. Or Bitcoin. We would love Bitcoin.
So it's just like equity tokens.
Now, you attach equity, it has values. It's a token with a certain asset which has a certain value. So you can attach whatever value. So what I am doing is I am selling 1% of a company which I incorporated in UAE. It's called Ranchi Mall FZD. 1% of that I am selling for those 21 million tokens. 21 million tokens. I don't know what the valuation is.
So will be a part of that 1%.
Who? Yes, we are. But I will attach them. So my aim in this case would be to make sure that the investor gets more value than 1%. So I'll keep on adding asset. I'll keep on attaching assets to it so that it's more than 1 value. Because I want the investor to get it. Okay, the kill was between Bitcoin bonds and also came between Ranchi Mall and Zerigo. So I want these people to be with Bitcoin. So I will try to make sure that they are interested in it. And they get a value higher than they can get any else. So this I think will be better than Bitcoin bonds. Bitcoin bonds he is doing right now maybe 85% right now. That's the return. 85% return in a couple of months. Okay.
But he has to share 50%.
After it, I already got his 85%. It's his 85%.
So it's 160%.
160% is net return.
Yeah, it's
Is that net return? 130% net return. Okay. Bitcoin price was $975 from 2008. That's 170% net return. That's how I will profit. 2 months back. I think the prices of Ranchi Mall went up to, sorry, the Bitcoin went up to $14.
Oh, it's gone.
It's still down.
Came and fell.
Okay, now 5 minutes. It's coming, yeah? So, let's just look at the graph. And then one minute phone away.
No, for throwing it, I need to press space bar.
Oh, really?
Yeah. Yep. But then the block will also be gone.
Okay. Oh.
Yeah.
Well, we'll come back.
Yeah.
We'll come back. They won't mess up the camera. So that's it. That's the graph. So I think.
So a little bit on the ICOs.
Yeah.
Typically when you do an IPO,
Right.
there is an underlying asset which is your company. Right? When you do an ICO, now
Yeah.
you have said you will give 1% of Ranchi Mall, but there is no obligation. So there are companies out there are teams out there who are doing an ICO, but not attaching any part of their company as a part.
But they're attaching some project or some revenue or something.
Yeah, exactly. Now
This is, I'm still, I'm going to add, I'm still thinking on what additional assets to add. That's why I'm not going to the public offer document. But what I've told you is that you can trust me that I will attach so much value that this value will be more than $1.
no, but so what stops somebody from doing an ICO,
Yeah,
taking that money
yeah.
and running away?
You can do that. But then they won't be able to raise any money again ever. Because people.
Yeah, you lost the trust.
So you have very much chance in that case. And you would want people to trust you again so that you can come back to them and raise money again because you need money. So you want to make sure that you're looking at everything. But that would happen. Like many people will run away, but then
Or they may not run away. So
or they will just fail.
yeah,
They will just fail. Yeah, so we'll have a lot of scam ideas, a lot of failed ideas, but some of them will be genius ideas. And those genius ideas will be good. And I want to be one of those genius ideas. I want to be one of those ideas. That's why I'm training it here. Slowly, we're not just going with that.
and a lot of these people they are saying that these tokens are going to be used in their internal ecosystem to do something. For example, Aventus is this event management company. What they are saying is you're going to sell event tickets.
Right.
You're going to use the blockchain
Right.
to sell event tickets so that I can. So you do an event.
Right.
You sell those tickets to me. I can sell it to him.
Right.
Or So there is no fraud in the event ticketing industry. Whatever. That's the broad goal.
Correct.
Now, to power this, they are doing their own ICO and they have created ABT, which is their own token.
Correct.
And they are saying it is ABT which is going to power my ticketing ecosystem.
Correct.
Now, what is the value of this ABT? How do I do
So ABT will definitely be accepted by the people who trust ABT, who know that ABT, there is a group of people who will trust ABT. They will value it. Okay? And if they can manage to get it listed in a crypto exchange, it can be exchanged for other currencies and then sell them. Okay?
Yeah, right.
Or, so you have to value, you have to give it value. Okay? So in our case, in Ansible ICO, I am giving a minimum value, which is whatever price you pay. Okay? I will give it back to you if you want it back. So that's the base value. But the market value will be higher. So you would not want to give it to me because you want to change it. But I'll give a floor value. So that's a floor value.
So there is a lock-in period in your product.
There is no lock-in period in
So if we want to get it back, we have to take it on a floor level.
I'm creating a trading platform. You can just sell it anywhere in the market. It's a market. The people will buy and sell. So I'm creating a trading platform as well. I don't want a lot of speculators there because what happens in speculation is that they will raise the value 10, 30 times and then fall back.
What's your demand?
What do you mean virtual demand? Demand is a demand. It's a demand.
Just to raise the price.
It's a pump and dump scheme. It's a pump and dump scheme, and I don't want those people because people lose money in that, So I want a more stable system. So initially I'm going to keep it restricted to clean and nice users, and when it's big enough, then I'll make it public. When it's not easy to manipulate.
What other use cases, right? ICO is one way of accumulating.
ICO, international transactions, international remittances, anything. This is considered to be internet of value. So the present internet that we have is internet of information. This is internet of value. People will come some exciting applications we don't even know. When internet we didn't know what will come out. That Facebook will come out someday. So this is a system of value exchange, internet of value. So people will come exciting applications, exciting things. Right now ICO. Right now the two big use cases are smart contracts, ICOs, and other two. Smart contract is something, a machine distribution of value. Yeah. There are rules which the machine will automatically execute. So you said after you give me $1 million right now, and I promise I'll pay you $1 million to all 10 of you after 10 years. A smart contract can automatically execute.
Is there a separate set of chain or something which monitors these contracts?
No, this is absolutely free market. There's no central authority. It's just buyer beware. The seller will come and tell you if you trust him, you will pay.
Where is this smart contract registered in a blockchain?
You can pick any blockchain you want. Everyone has to be your trusted people. Okay.
So what I'm trying to understand is, so then it means a transaction has additional attributes other than value. It has a time attribute. There are other attributes also.
Okay. The blockchain gives you that service. Like Bitcoin blockchain also gives the service. There's Ethereum blockchain is quite famous for that, and there's another blockchain called counterparty blockchain. And I'm also doing a flowing one blockchain where you can do all that. You can attach any time locking, automatic distribution, condition, and then basically they are giving you computation power on the blockchain.
So why are these other blockchains not making that much money as Bitcoin?
Because Bitcoin has more number of users. It's more valuable and powerful.
So very philosophical question is it just about the first mover?
First mover has tremendous advantages, massive advantages.
No, I mean, is it
The
just that?
person who gets more users, it becomes more powerful.
First network, right?
First success
So
network.
Orkut was before Facebook, but Facebook did something right which made them big.
Yeah.
Something will happen here.
You're nice.
Yeah, exactly. So therefore, so that's my question actually. So is it that Bitcoin has something that is more valuable than, so why are more users coming to Bitcoin compared to Ethereum, for example?
Because
More users, more users.
more security. Yeah. Why are everyone is on Facebook? Because all your friends are already.
No, but that's the exact counter argument.
Yeah.
Orkut started before Facebook, but yet Orkut went down and Facebook
But
remained.
Orkut was not big in US ever.
Yeah, fine. I mean,
Orkut was big only in certain markets. Okay.
Right.
What happened was Facebook started from US. It was much bigger than Orkut at all times, except not big in India and Brazil.
in India.
And Brazil, And then the power becomes so much that even in India, there's a lot of just failure.
Nikhil, it's like this, the way I understood it today. Suppose today India comes up with their own blockchain, outlaws all of this, but creates a blockchain of their own. I'm willing to bet it will have more users in India as long as transactions are understood, right? So if there is a feature of a blockchain, like a feature in Facebook,
One of the
so
blockchain.
compelling, then it might actually kill the other. It is totally possible.
Anything is possible. Anything is possible. You can go anywhere.
No,
But blockchain will stay. The philosophy will stay.
Blockchain
The philosophy will stay. And no blockchain will never be killed because all the blockchains will be very so long as there are people finding, none of the blockchains are banned. The 650 blockchains, not even one at a time. Everyone is just one user, 5 users to run a blockchain.
So here's that other part that, with blockchain or cryptocurrency, you don't need fiat. I mean, you can live without government.
Yeah.
Now the whole concept of India outlawing, let's say Bitcoin for that matter, the question doesn't arise because what are they outlawing in the world? They don't have an authority.
What will happen is that government of India is right now 230 billion as a revenue budget of government of India. 230 billion. If Bitcoin becomes a trillion, they can have their own army and they can have their own nuclear arms. Okay? And so India will not be able to compete. So only the most efficient and economic system survives. Okay? So India, if it is the Indian government system, the democratic system, if it is not efficient, a bigger monster will come in.
But then the government does not control this.
It cannot control it.
That's not. So what happens is when markets get created, if you look at it historically, governments did not create markets. People created markets. And why did regulations come in the first place? Because somebody was getting hurt. Just because, so government will never control blockchain, but government can control your access to blockchain as long as you are within.
No, they got it in dark web, and that's what they tried. I mean,
Dark web, they don't. So
everyone will do dark web. If someone is making money, if you're making $1 million, you just use the dark web. You won't get government permission. People will find it best.
China does not allow its users to do certain things at all. So Google is not controlled by China, but China has controlled what you can do with Google in China. And then the same thing will happen eventually. So WhatsApp, they want to unencrypt the messages. The government wants to. There was a huge case of FBI with Apple. These strains and will always exist. I'm just concerned with one of the people talking about investment. Just for investing, create your own investment philosophy. I'm not about Bitcoin. So tomorrow I can say that company ITC is going to do very well. So on and so forth. Just have an investment thesis in your mind before you make those decisions.
But I still don't completely reconcile with that because see, here is a technology where you're saying that there is no trusted third party. You don't need a trusted third party in the blockchain. That right? You don't need trusted third party. One of the biggest reasons that economic systems have needed an anchor in government regulations is because you needed trusted third parties like a reserve bank or a central bank of the country, which you don't need in this kind of setup. So in that context, doesn't it completely obliterate the whole possibility of a government outlawing any cryptocurrency in the world?
See, you are right. So I'm not sure if I have the answer, but things like ICO, for example, are places where people can get burned. So is no regulation required? There might be regulation and things start happening.
And value of regulation is only when people agree to it. Okay? So if someone will do something privately, so VPN on your computer, no one will come to you.
What was that big network which they eventually shut down in the dark web? The Indus, what was it?
Yeah, I mean, if you can find the person and you can arrest the person, okay. But Bitcoin is not one person. Blockchain is like millions of people. Who will stop? If there's someone running one website on dark web, you can go and if you can find it through some other link, you can go and catch his link and stop his server. You can stop it. How can you stop something running in 5 million people all over the world?
They do not have particular organization, right?
There's no organization. There's no organization. So governments know that they can't stop it. So they themselves federalism is very clear. The government is going on certain aspects of it. One of them is manipulation. Might not.
But see, that is why my whole disappointment with cryptocurrency, that here is a chance where you can talk about a transaction network where cost will be lower than the existing banking system, which I don't see anybody utilize.
No, I mean, it's just not about cost, right? It's a fallacy to assume lower cost means better value. You have to give more value, not lower cost. Okay. More value can also be giving you more money, and then spending more.
No, okay, so
Why
think
not
about
more
how things were,
Yeah.
say in 1999 in India, right? Everything was cash. Everything was cash. So even if I had to buy a house, I would spend huge chunk of my cash reserve to buy a house. What does that mean? Taxation apart. So we're not talking about tax evasion, but there was no transaction charge on transacting in cash. Even today, there is no transaction charge on transacting in cash.
Actually, your cash transactions actually was calculated, it was 63,000 crores
Right.
of printing money, distributing money,
Agreed. But for an end
end
user, there is no transaction. I still don't pay money. If I give him 100 rupees, he gets 100. He doesn't get 99.99, right? But the moment the same transaction moves through a card system,
2.5.
I give him 100. Unfortunately, he gets 2% less, right? So here is where and I mean one of the underlying reasons for that.
But you also earn 500 extra because you also recipient of card income as a merchant. There is more cash in the economy, there is more economic activity. Cards make more transactions possible, which make a bigger economy. So your share of income in the nation went up from 100 rupees to 130 rupees, and there was extra transaction of 2%. So because your net gain of 28 rupees. That's the case. We have to see the complete picture.
Why would you say that the net income, which was like...
Because if your velocity of transaction improves, then income improves.
Velocity of transaction improves, but the total quantity remains the
So
same.
quantity will also increase. People, if you will exchange more, then the quantity will also increase, the cost will increase. That's why
Economic activity will
economic
increase.
Processing power.
So Bitcoin is giving a global economy. So it's more exchanges. So the world GDP will increase. So we just saw that world GDP can increase all the way from 80 trillion to 6400 trillion. That's real money. When you divide, so 1,000 times increase in US income. So your basic the goods will, all basic goods will be taken care of automatically just by buying Bitcoin. So buying like, that's all you have to do.
These smart contracts, which are like, let's say it's periodic payment, 1 month this, next month this, next month this. So let's say I have 100 Bitcoins today, and I create a smart contract of 100 Bitcoins. Does the system allow me to transact Bitcoins other than what I have committed to the smart contract?
No, you have to own it to be able to
Let's
connect.
say I have 100 Bitcoins.
So you have to distribute that 100 Bitcoins in a certain order.
Let's say in 10 months I have planned to
10
hand
each.
over money 10 Bitcoins each. But in the interim, let's say the second month or third month, I make a transaction of 10 Bitcoins. Does the system allow me to do
That depends on the smart contract coding. You are a smart contract coding. The smart contract will faithfully execute what it told you to do. Except you must have the input to distribute. You cannot distribute what you don't have.
Who does the smart contract coding?
Is the smart contract?
Coding. Who has encoded those rules?
No, I mean, there's a platform available. You choose the platform.
The platform does it.
Yeah, platform.
But the platform will not know that I have used my pool of Bitcoins for some other transaction.
No, it will put a lock on it.
Why won't we be able to use it? How is useful then? How is
It's
useful?
useful that
I'm
you
not
know-
able to use it in any other place.
Yeah.
How is useful?
No, so take
I
a
won't
very
be able
different
to earn
example. Take a very different example. There could be a smart contract where you say that, let's say I am a company, I ask you for investment. Okay? Let's say
You can sell your smart contract for more money. So you have a smart contract, so this smart contract has some value, and someone else can give you money in your smart contract. The smart contract is also an asset, right? When you do a bank guarantee, you're putting money in the bank. The money is blocked. Then the bank is telling, okay, against the bank guarantee, I give you more money. So the person whom you have given the smart contract will give you, all right, I'm sure I'm going to receive 10 Bitcoins from now, so I'll give you 9 Bitcoins today for you to spend.
Yeah.
Something like that.
That's the.
I can leverage that contract.
Yeah, it's an asset. It's an asset.
So the smart contract says that against future income that you have, the investor will get interest payments, for example, right? Now, instead of that, going through a banking system.
Or you could also have someone
It's a
else.
kind of
Or you
model.
you can also have someone else giving you a smart contract, putting you money after 9 months.
So it's just like
So that's because your money is coming after 9 months, so then after 9 months and 1 day you can take it out to someone else today, and you can get some money today at a discount. Many ways you can use smart contracts.
it's something that was enforced via a legal contract in the banking world can now be done using some